Hi, I often get asked about when talking about deals, about different parameter when analyzing a deal, like maybe some of the terms that people hear are like ROI, or another one would be ROCE. This one would be return on capital employed. ROCE would be return on capital employed, and ROI will be return on investment. Other deal analysis indicators, terms that people might hear would be gross yield and net yield. And what else? Yeah, more or less these are the main parameters that people use to analyze deal, and I do get that they are important, and in some instance, especially after completing a deal, meaning that it was purchased, it was refurbed, it was then decided to let as a buy-to-let, or as an HMO, or as a service accommodation, or maybe it was a commercial investment or a flip. All these parameters are really useful when you have all the data, all the numbers, and usually you have that after you complete, to see that the property is giving you the return that you hope to when you enter into a deal. But for me, the number one, the one that is crucial, is the margin. And typically, I need to see a 20% markup on my margin for me to get excited about a deal. So I don't know if you heard that before, but there is a saying that you make the money when you buy the property. So you buy wholesale. When you buy right, you already know, although the money is not in the bank, that you made the money on the deal. So for that, you have to demonstrate that the margin is there. And how you do that normally is by finding comparables that are like for what the same property that you are buying, to demonstrate that. So for example, one of the recent buy to sell flip projects we did, I bought at auction. It was a guide price at 110k, and the comparables showed similar property in the quarter of a mile or in the same street would sell for 200k. So already there is a margin there, but obviously I have to go and view the property, check all the elements, and see with either a builder, or in my case I have the experience already to know how much things will cost to renovate the property. Take into account, in this instance it was an auction property, the auction fees, the stamp duty, the legal fees, and put a little contingency on the cost of refurbishment. So what I did here, I went to see the property. I estimated that with the auction fees, the tax, and the refurbishment, which was pretty light, it was just like a new kitchen, didn't need a new bathroom, new floors, and a lick of paint, and a few other bits, and it would be about I think about 15,000 pounds, or maybe less, with the stamp duty and the legal fees. It worked out to be just over 20k refurb. So I thought that if I can get everything up to 160k, I have that 20% markup to get me excited that I will make the money when I buy, or when I'm successful at buying at auction. So I went in with an offer of 130K, and I was told that there was higher offer, and we gushed a little bit, and I upped my offer to 130K, and it was accepted. So 138K was the purchase price, plus about 22K of refurbs and fees. Total exactly how I wanted it to be, 160K. I had a 20% markup here, so I was happy with that result. Then it went on the market and was sold for 210K. So 10K more than I anticipated, which gave us a nice 50K profit. For me, that was just by a simple exercise: purchase price, refurb and fees. How much is the maximum that it's gonna be, and do I have 20%? Do I have that margin there? In that case, it was there, and I got a bonus. Surprisingly, sold for more than what I was expecting. Again, great deal. There was a bonus on this one that I noticed that at the end of the refurb, that the house next door, the furniture looks like a personal belonging were moved into a skip. So I put a note through the door, and I got a call a week or so later. I met the owners. It was the children of somebody who unfortunately passed away, and I told them that I'm from next door, so they kind of it was like an instant rapport building, and we agreed to buy her house next door for 120K, 18K less without auction fee, because it was a direct to vendor. Although there was a bit more work to do there. It needed central heating, rewiring, and the total refurb there came to 30K. And now I knew that the comparables are 210. At that point, I already valued the property next door that I'm going to sell, so I knew that it was valued at 210, and then sold it for 210. So I had 210 as a comparable, so that was a no-brainer here. We had 150K in total, and the estimated sell price would be 210K, giving us a 60K profit. At the end, this one sold for even higher, 215K, which gave us a total of 65K. I ended up buying this with a joint venture partner who funded the deal, and then we shared the profit. So that was a great deal, example of how the margin is what actually drove me to decide that this is a great deal. Both of them, I ended up buying two in the same street, and that's how I do it usually with flipping. And currently I'm working on a deal which is a little bit different, although the concept is the same. I still need to see that 20% markup regardless of what strategy I'm doing to get me excited that there is a deal. So currently I have a deal that I already bought for 160K. That is with the fees and everything all in, and I'm going to convert it into an HMO. It's quite a large property in a good area for HMO, although I could probably sell it for 180 to 200K, I actually already got an offer for 150K to buy it as it is, which I rejected because I'm more interested in what I can do with it as an HMO. It fits more the strategy in this case, and I'm going to fund it with bridging. So the bridging lender already send their valuer because they want to know how much it's going to worth now and how much it's going to be worth when I complete the work on it. So they estimated that once done to a 6-bed HMO conversion, it will be worth 400K. I estimate that it will be about, let's say, 150K here So this in total will come to 266k with a valuation of 400k. I am expected to get all money out on this deal. So this is again, because the margin first is what important. After I'm gonna finish to do this project, I'm gonna put it into a nice Excel. There will be a nice breakdowns of what rent I'm getting from each room, how much in total are all the expenses to keep up with the letting of the HMO, what will be the cost of the new buy-to-let mortgage after I exit on the 400k, what would have been the total cost of bridging the property, the finance cost, and then I'll have all those indicators clear, and I'm pretty confident that it will be a good reading. So again, this is how I analyze. If you want to talk to me more about how I view deals and analyze deals, I will put a link in the bottom there to book a call with me, and we can chat further about any past deals I've done or any future deals that I'm going to do, and maybe there's one there that might interest you.